points to Rajat Rajgarhia. He's Managing Director, CEO, Institutional Equities at Motilal Oswal Financial Services. Rajat, thanks very much. Good to have you here. What do you make of the pace of the move we've seen, Rajat, so far? How much of this sort of recovery are we already now sort of pricing in?
Hi, Prashant. Prashant, I think while we discussed a lot about how the Nifty has moved over the course of last 3 weeks or 3 months, I think important to note is this is not an isolated trend. This is a trend that is being seen in every market in the world. I've been a believer over this last 3-4 months that the lockdown and the economic impact in India has been severe, and so the Indian markets will underperform the global markets by about 10-12%, and we are carrying with that trend for almost last 3 months. The global markets, if you look at S&P, Korea, Taiwan, most of them are flat for the year. The Nifty is down about 11 to 12%. So I think we are just following the global trend, although we can discuss that, what components, what participation, but the world markets, are just back to where they were at the beginning of the year, and India is just following that trend. I don't see any other reason to be made out. This is a global rally, this is a global recovery.
Okay, that point is taken, but I wanted to talk a little bit about what took place this week, because interestingly we saw a big comeback in many of the financial names, especially the marquee NBFCs like the Bajaj Finance, Bajaj Finservs of the world. What do you make of that, and do you think the worst is over there?
Well, I think what we saw in the month of April was the worst ever, because you almost had a zero economic activity. You can't go below that. And since then, the narrative has been of trends being better. In April, if you were talking about the zero activity, in June we are talking about how far from the pre-COVID levels, whether you are in that range of 60 to 80 or whether you are in that range of 30 to 40. Plus, many of these financial entities have released their latest business updates, which have brought some kind of excitement back. But I think it will be a while before many of these businesses return anywhere closer to what they were in the month of Jan and Feb. Market volatility notwithstanding, I think the dislocation of prices in many of the well-run companies was a bigger factor for this rally than anything else.
Rajat, what is your own opinion? I mean, I'm just sort of looking top down once again. You said that we're underperforming by 10 to 11% what global markets are doing. So it's kind of accounting for the more severe impact on the Indian economy than other parts of the world where there's been more help for other reasons, etc. But you have to look forward, right? I mean, will the recovery really show up? Because if it is not, then prices will follow that. What is your opinion?
So, we have our own version of NASDAQ in form of Reliance right now. So if you look at US markets itself, you have, a Dow down by about 13% for the year and NASDAQ up by 15% for the year. Similarly, if you look at Reliance versus Nifty, you will see a similar number, right? So I think specific businesses, specific companies which are doing well are finding a lot more momentum. But I think it is going to be a difficult path of recovery for us. The markets are definitely getting buoyed by the liquidity all around, right? We will have to consolidate. Either the markets have to consolidate or the recovery pace of the recovery has to surprise us from here on for these markets to gain further steam. Also, important point that you just mentioned in your initial commentary was look at the institutional participation. In the month of June, the institutional volumes were flat over month of May, while the retail volumes were up 41%. The mid caps, the small caps index have outperformed the large caps. So a fair bit of momentum, a lot of rally. The typical that you almost feel like you're in a bull market, except that you are still into a negative GDP growth environment.
You did mention that trends are improving, especially in the NBFC space. The other space I wanted to discuss with you, which was in action this week, was Telecom. The data that came in from Vodafone Idea was on the negative side, and now there's a growing belief that we are heading into some sort of a duopoly in the telecom space. Do you think there are more structural upsides to names like Bharti and Reliance? Because even Reliance, for that matter, hit an all-time high once again this week.
So there are two things here, Sonia. First is how the business will do. Second, how will stocks do. As far as the business is concerned, I don't think we have seen even 1 quarter of ARPU impact being fully reflected. Last quarter, our Jio ARPU increase was low single digit. Bharti did fully captured. We are looking at every quarter the numbers to grow meaningfully quarter over quarter for both of these companies. And if you look at the commentary of all of these names, I think the ARPU increases post what we saw a couple of quarters back is going to continue to follow. That is one. Second, the digital initiatives, which is now becoming the way of living, is going to result into many extra business revenues for the sector. And the sector, as you mentioned, is not limited to just two companies. On the stocks, look, these stocks will become the allocation stocks. Reliance already is. So if you look at the telecom weight in the indices, it gets masked because Reliance still gets classified as oil and gas. If you were to put Jio as a part of telecom weight, then the telecom weight is almost double digit now in the indices, right? By default, benchmark guys are underweight Reliance because they don't have more than 10% leeway. Bharti is something that we think will become a part of top 5 allocations for most of the benchmark guys. This is just the first year of story playing out after 10 years of underperformance for this sector. I think we have a long way to go in this space before we can say that this is now fully priced in. This is going to be, I think by consensus, this is an exciting story for portfolios to own in the years to come.
No, absolutely. Rajat, where else is there a longer runway from here where, it's not fully already in the price, where there is opportunity?
I think, first of all, technology as a sector will keep doing well. So while we keep talking about the stocks making new highs, the profits are making new highs, right? The balance sheet quality is also further inching up for these companies. And I think companies like TCS in a COVID-like quarter delivering a just slight miss, but I think the environment could have made the numbers even far worse. And now with them guiding that things are going to look better, you will start seeing gradual improvement from 3Q onwards. 80% of the profits are being paid back. I think it's a fantastic sector to be in, where the top 2 or 3 companies are driving the bulk of the profit pool into the space. This is a space which can continue to compound. If you look at 12% earnings growth, 3-4% yield, I think 15-17% compounding is quite possible. Second, in financial services, I think the non-lending businesses provide lot stronger opportunity today. If you look at the last 1 decade, it belonged to NBFCs, private banks. While private banks still have room to grow, I think the non-lending businesses, be it insurance, both versions, life, general, capital marketplace, asset management companies, wealth management companies, all these stocks, Prashant, have got listed only in the last 2-3 years, right? And I think allocations are still single digit for them. In the coming years, as their profit pool keeps expanding, you will see, and all of them, by the way, are free cash flow companies, right? They can have almost 60, 70, 80% payout ratios. So many of these companies will grow in size as the economy keeps growing. That is a second piece. First is telecom, second is technology, third is financial services outside the lending business, right? And fourth, I think, have to keep picking up pockets of consumer discretionary. The next 10 years of consumer discretionary could be different from the last 10 years. Starting multiples matter a lot. So companies which today trade at 60, 70p may not become a compounder over a long period because we will have PE rating at some point of time. But I think if we are able to catch some of the companies in the early stages of their business transformation, there's a lot of money to be made there.
Okay, well, it was a very enriching conversation. Thanks a lot, Rajat, for joining us. And you have a good weekend. We'll touch base with you once again later. So that's the word coming in from Rajat Rajgarhia. He does say that there are plenty of spaces that you can be optimistic on now. He likes the IT space. He likes telecom. He also likes private sector banks. Let's take a quick break on that note. On the other side, Rohit Srivastava will be joining us to give us some cues on what the technicals for the week may look like. Stay tuned.